Why does this market keep faltering?
Yeah, I think if we look at the different drivers, right, the macro factor, the dividend, the earnings, the external factors, and the policy, macro data, first quarter surprise on the upside, right? So that's when sales that were upgrading GDP forecast. But in May, June, the data actually sequentially start to weaken, especially when we look at consumer confidence, look at some of the retail sales data. Dividend, which was the best performing strategy in first half this year, but many SOEs actually ex-dividend in June, July, in middle of the year, and many of them do not pay interim or won't pay interim until like January, February next year, which means there's no dividend payout in the next 6 months or so. So that pillar is also kind of fading away, at least for the very near term. Earnings, we're going to get earnings in the next month or so. As I said previously, consensus forecasting 14%, and I think it's probably going to be mid-low single digit. So I think there's still significant downside for earning revision. And external factor, as we're getting into the busy election season toward the second half of the year, the geopolitical tension might only get worse, the tariffs, this protectionism. So finally, the only thing that can support the market to retest the May high is probably policies, right? So I think the next week is a key thing, political event is a key thing markets watching. If there's positive catalyst, market could go up 10-15% to retest the high in May. But, for no non-event or disappointment, market could retest the mid-April lows.
And what are expectations now in the plenum? Is it just low? I mean, what are people saying to you?
Yeah. I think expectations are not high, right? But still, I know like hedge fund investors see that as a potential policy put, so they're unwilling to short ahead of the plenum. But if plenum confirms to be more neutral to negative catalyst for the market in the near term, this might become a catalyst for sell.
Well, what do you want to hear? What will be potent enough to get us that 10-15% upside?
Yeah. So I think from market investor concern perspective, property market, right? Previously, there were high expectations on destocking on some sort of national platform, which didn't realize in the May 17 policy package. So, many investors were asking, why not, right? What are they waiting for? So I think continued effort to drive the property in terms of destocking, in terms of stabilizing the expectations on property prices are still very, very important. People also care about employment, consumer confidence. Right, so any effort to promote new growth drivers, to promote employment, that's important for consumption and for property, home buying confidence as well. And finally, I think externally there are more concerns about tariffs and overcapacity and price war, deflationary pressure. So what China is going to do ahead of in light of these external trade tensions and to address some of the overcapacity issue in different parts of its economy.
So let's talk about performance. I mean, the second quarter, you saw pretty good performance when it comes to what? You mentioned SOEs. I mean, part of that is the utilities, the financials. Are you saying that now it's time to trim those? What are you looking at for the third quarter now?
Yeah. So we're saying taking a pause in the SOE strategy, right? Previously, when I start to talk about the barbell, one side is the defensive SOEs in January last year. Generally, overseas investors do not believe it. Say, no, we don't do SOE. Definitely not SOE banks, right? But 18 months later, now I think SOE become very consensus. Even when I was marketing in the U.S. in June, the EM long onlys in New York City, in San Francisco, they all own SOE banks, right? And some other SOEs. So one, I think position has become a bit crowded. That it's a very, very consensus strategy. And two, as I mentioned, banks as a sector, telco as a sector were up 20% year to date, and oil and gas were up 40%. So after the share price rally, dividend yield actually declined. Banks as a sector were yielding 10% in January low. Now the yield is less than 7%. Many of the stock yielding only 5-6%. So yield become less attractive, but also timing-wise, they just ex-dividend, right, in the past few weeks, and the next payout is probably a while away. Now, some sectors like oil and gas, like telcos, they pay interim in September, so there's some support for specific stocks, but majority would not have payout in the next 6 months.
So what is an easy sell now where positioning may or may not be crowded, and you're still getting investors welcoming the idea with open arms, for example?
I think, I got a lot of pushback on the SOE taking profit story. So people still want to own SOE. Our advice is for investor to add quality beta on the low. So for example, some of the internet names, they are getting into the lower range of the trading band, right? And I think the worst in terms of flow derating is probably behind. So I would selectively add the internet names. Consumer, I think people are becoming much more bearish, more concerned on the consumer names. They're willing to pick very small, specific niche names within consumer, but the large cap names like the liquors, there's a lot of concern.
Right? Yeah, you mentioned about earnings projections at 14%, still high. You're saying it's what, single digits or so?
Low single digits.
Where are we going to see that mismatch, that displacement, you think?
Yeah.
In the sectors?
What gets revised lower?
Yeah. So, earning revision actually became positive in May, June. I guess one is partly because internet were reporting earnings in May, and internet earnings bottom line was generally okay. But also, I suspect that's partly to do with market rally in April, May, that, sell side need to justify the PO upside. So there's more optimism in terms of earnings upward revision, which apparently, the rally didn't sustain as of now. So I think in the July, August, the first half earnings season, we are probably going to see pretty broad-based earnings downgrade.
Are you looking at, or just looking at the macro picture and the possibility that hopefully they deliver pro-growth stimulus? Is there anything on the monetary side that you think might be on deck that they could deliver big enough, whether that's yield curve control or all the conversations recently, that might spur the market into an awakening?
Very unlikely. I think there's a lot of conflicting goals, right? For them, defending the currency stability is probably a very high priority. And the falling bond yield, the falling interbank market rate is certainly adding pressure to the currency. So for the short term, they are very, very unlikely to do big policy bazooka or big stimulus on the monetary side. Also, they need to reserve policy tools for potentially January next year, right? What if the U.S. election resulted in a sharp increase in trade tariff, 60% blanket tariff? They need to reserve some policy tools for first half next year. And for now, GDP data are okay, right? And the stock market are doing okay. So, I guess from policymaker perspective, there's not much sense of urgency or sense of crisis that they have to do the bazooka now.
You mentioned about the election risk. Did the latest presidential debate change your mind in any way? Or is your team at least gaming out scenarios of what November is going to look like now for Chinese markets?
Yeah. I think, directionally, it's probably very consistent, right? Whichever party wins, the direction is very consistent in terms of areas that they're focusing on, AI, semiconductor, biosecurity, biotech, things like that. But I think it's more about consistency versus unpredictability, right? And currently, we're looking at probably higher policy unpredictability, potentially more chaotic, less disciplined new policies coming out in January or first quarter next year. That's why China probably need to have better preparation.